Good morning, good evening, good afternoon, wherever you are in the world. This is John with Tommy's Top Picks, here to bring you an uprising box opening along with some economic news, kind of how I used to do things. Really enjoying this product so far. Lots of fun things to get in the boxes. A lot going on here, so let's just dig in and I'll talk you through a couple of items that I have to talk about. And I'm going to do these probably once a week for about 5 or 6 weeks as I open my boxes. So, first thing of note and interest. Oh, before we get started, if you like the content, hit the subscribe button, leave a comment, all those regular things. Really do appreciate that. Helps the channel. Doesn't cost you a thing. Would really appreciate the support. So yeah, we are not able to monetize yet, so don't think that we're doing it just for money or whatever. We're way too small for all that. That's not what it's about at all. It's just so other people can find the content. If you like the content, they might like the content, and that will help us. So, let's dig in here. Let us look at Uprising. So, as of July 5th, now, granted, this is coming off of the 4th of July holiday weekend, there's an interesting little blip, I would call it, in the general marketplace. The Uprising cards that had, up to that point, been dropping pretty quickly, which is normal with a new set, stopped and reversed, actually. Many of the top selling cards went from just every sale being a lower sale to selling at a higher price than their lowest price that they had hit. And this was true across the board of the top selling cards. So think your legendaries like Coronet Peak, Crown of Providence, etc. Shuko, I think, was one of the big ones. Let's say Shuko might have hit, I don't know, I'm making up a number because I don't remember the exact number, but like $69 for Shuko, right? Well, over that, from the 4th to the 5th, it jumped in price, going back up towards 70, 75, whatever. Same thing happened with, all the main ones, Furnace, etc. I think this also included the Marvels. Very intriguing bit of information there, because it shows that we started to hit a price equilibrium where the supply of cards people wanted and the demand of the people that wanted those cards had finally found a floor, a footing. Now, since then, and this is only one day later, it has reverted again. I'm starting to see some of them continue to decline. Coronet Peak is one that is most notable on the regular non-foil, and most of this applies to the playable cards. I'm not really talking about the collectible cards, although there's a few exceptions there with the Marvels. But Coronet Peak has continued to decline again. It's started to go back down. So here's an example. I just pulled up some data over here on the side. $60 for a rainbow foil, and then it jumped up to $62. And then it dropped back down, hitting 58. And then again today, it's at 59. So you can see we're starting to hit that kind of like, this is the price floor point. On the charts that I do for the sealed, if this were, one of those charts, you'd see that zigzag line, right, over days. Nice, Ice Eternals, beautiful. I love that in foil. Getting that from my own icy deck. So it's good. It's a good sign. It means we're starting to find the floor. I mean, this is only a few days after U.S. release. Release was on the 1st, right? We haven't even made a full week yet. So I fully expect further declines to happen as people get supplied, boxes get opened, etc. Nothing surprising there. We will see this happen, but I do like to see that we're starting to hit the floor because it allows us to start normalizing prices around things. Marvels seem to be somewhat of an exception, especially the rarer ones. Now the rare rated ones, not the Majestics, are they're actually just continually falling. I don't even think they got the blip. The Majestic ones all got the blip. They hit a floor and then went back up. I don't think they've continued to decline. Maybe a little bit. Maybe Tumultai, as of this morning, is declining just a tiny bit. I'm not sure. But it's very interesting to see. Now, let's talk about why, or some of the things that are playing into this. I just watched the Louis Kitchen Table TCG EV tracker for Uprising, and his data is preliminary, but he has a lot of data, so I like to look at large quantities of data more than anything. He is tracking certain pull rates based on people that have opened like 100 boxes or more. And he's showing that the Marvels are one every other box, give or take. You're starting to see that cold foil, like Marvels and tokens, are more common than kind of expected. So those prices should come down over time, with the exception of the Majestics, of course, right? Because they're very hard to pull the Majestic Marvel. So you're starting to see these little pieces of data come out as people are opening boxes. And again, it could just be clumped, small sample size, etc., right? This is all preliminary, all very early, all week one. But as of now, the way he's tracking it, and he's not perfect, he's made mistakes, so you got to take it with a grain of salt. It's week one. He currently says the EV, your expected value on any given box, basically the average over pull rates and number of boxes, etc., is around $123. So if you were to open, I don't know, 100 boxes, the per box average price would be $123 in sale value. And that's excluding the Fable and excluding, I think, Majestics or whatever, because he breaks those out so that it's like more realistic for a per box basis. So it's a little higher. If you're actually doing like 100 boxes, it's a little higher. I think it's like 130 or something like that. So it's interesting because the boxes are selling for like $80, $79. So they're selling a little low for what the expected value is. Now, again, pull rates are artificially soon, right? The data sample is small. You know, he could be making a mistake in how he's tracking things or the rates that he's expecting, right? Because small sample size. And the market is still adjusting. So all those factors in play say there is a potential arbitrage opportunity right now to buy boxes, crack them, and sell the singles. And this is mostly true in larger quantities of boxes, because it's on average over a large number of boxes. So if you feel like you got the gambler's itch and you want to take a roll of the dice and see if you can crack something cool, now's a fairly good time to do it if you can sell them, you know, on TCG Player. He's using TCG Player prices, right? That's basically what that boils down to. Pretty cool. Nice to see in week one. That I think is different than historically. I think over Tales and other sets, it was the opposite. It would drop so rapidly that the EV was, you know, opposite. So it wasn't really worth opening them, which then leads to excess supply of boxes. So far, maybe 2.0 is working. The collectible stuff is cool and collectible and hard to get, and therefore holding prices up. I'm not sure. We'll see as the data goes on. That's part of what this series will be about, is like, how's 2.0 actually doing on a post-release data basis. That's exciting to me. I like this. I'm okay with this. I'm okay waiting and being patient for the, you know, the cooler collectible stuff to, you know, come down if it comes down. If I miss the bottom, I'm not going to cry. I did have a minor heart attack when I saw the prices start to tick back up. I was like, oh my God, did we already hit bottom? Because I did not expect it so fast. The continual decline of some things makes me more confident that we did not. So, you know, it's interesting to watch. I'm very fascinated by this 2.0 product release. All right, so now I'm going to get into the broader topic, and I have to apologize. This isn't the most fun. Nice. Cold foil quelling robe. This isn't the nicest situation. It's just reality, and I want to talk to people about it and make sure they know where we are and kind of are thinking ahead on this. So it looks like we're about to hit a recession. In about a week's time, we should have a first official declaration based on modified data over the last quarter, because it takes about 2 weeks for them to get the last quarter's, you know, economic data sorted out. So by next week sometime, I'm not sure when, I expect to see an official statement that we have officially hit a recession. To hit a recession, it's 2 quarters, I think, down 20% or something. There's an official designation, something like that. In a row, that's an official recession. So if we're in a recession, the question is, how long does it last? Is it going to continue? You know, all these sorts of things. But there's a couple of key signs that make me more confident than just the data that we've seen so far. Oil dropped below $100 a barrel, which it's a good thing, bad thing, depending on how you look at it. There's different reasons for it to matter. But typically when that happens over the past decade or so, it is an indicator that a recession has hit, because oil demand goes down because people have less money to spend, right? The other one is the yield curve on bonds inverted a second time or third time. I haven't tracked it very closely, but I know it did before. And that's usually your flashing signal for your early sign that there's a recession coming. And it's done it again. So this is, again, it's flashed multiple times. That's usually a pretty good indicator that's coming. So I fully expect that to happen in the next week or two. The official, I guess, declaration usually comes from the National Bureau of Economic Research, NBER. They take a long time to officially declare. It's usually about 6 months into the recession. So we're theoretically 6 months into the recession, so they could declare it any day now. Sometimes, like the last one, it took them almost a year to declare it. I guess it just depends on how messy it is and how much noise they have to work out of the economics and that sort of thing. It's a research group. They take time to do the research. But anyways, that should be coming at some point as well. And that's your more official designation, fully researched, et cetera, as opposed to just like economic data assumptions. Something to think about. Average length of a recession over the last, since 1857 or so, is less than 17 months, which sounds like a lot. So it's a year and some change. If you look at the period since World War II, which I think is more relevant, then the recession is basically 11 months, so a little less than a year. I would say the more recent ones have been even shorter, and I'm guessing that's because we just are better at dealing with economics than we were back in the day. Nice. Foil, majestic. Very cool. So I think it's worth noting that if we do hit a recession, they last about a year. If we are in a recession, which we will know in the next few weeks or so, we've been in it for a little bit, right? Because it takes 2 quarters of it to be declared it. So that means we're 6 months in, give or take. Maybe off by a quarter, depending on how it all works out. But the idea that it lasts 11 months and we're 6 months in means another 6 months we start to come out of it. Now, historic recessions, when that happens, it does feel like you're out of it a little bit quicker when it comes to speculative assets. So this is where if you're, not financial advice, but if you're looking to speculate on a dip, start getting serious about it right now. Because what tends to happen is equities and on-risk assets recover before the recession markers turn around. So buying right as it's declared tends to be the best time to buy if you look at historic data on equities, at least. This is just kind of an equity analysis from history. But that seems to be that it works with all risk on assets. Any sort of collectible, I imagine, would follow a similar pattern, etc. Some things may be off by a few months here or there, but point being, if you're looking to buy, it's time to start buying. I myself am buying more aggressively than I have been, and I will continue to do so. Now, one of the ways I like to plan when these things come around is I say, what does it look like to have 10 months of capital to put into something? So that is, what can I budget for 10 months that I'll be able to spend on these speculative assets? Because if you do it over the long term, you're averaging out your cost basis and it helps you out. So a 10-month budget, say 1,000 months, or 1,000 months, 10-month budget, $100 a month, what does that look like? $1,000, right? So $1,000 over 10 months, going to be put into some level of speculative assets. We can talk about how to kind of balance the portfolio later, but basically you plan that amount out so that you're able to put in that money every month. And I like to do it on a weekly basis. So if it's $100, it's $25 a week, right? So every week I buy a thing. As we were talking about, we can go to foil, Now, cardboard's not your best speculative asset. There's better assets out there, equities, etc. But this is a cardboard channel, so we're talking about that. So for $25, you can get rainbow foil early cards, right? First edition cards. You can get some fancy older Magic stuff. It's out there. It exists. I think there's some reserve list items around that. As Rudy said in his recent video, the ABU buy lists have fallen off from the big buyers. So that means those prices are going to come down. It's more than $25, but maybe you just spend 1 month buying one of those. So just wanted to let you guys think about that for a minute, understand it, and kind of parse that out as we go into this time ahead. And I think it's important that people know how this stuff works and in what I guess professionals do when they look at it. Not to say that I am, your professional or something like that, but it's worth. And again, not financial advice. Don't take it to the bank. But if you have some extra cash, your life is stable, your job is stable, and you're looking to invest for your future, these are the times when the most money is made, historically speaking. And I think it's valuable to evaluate kind of where you are in that scale of things, what you can do, and again, plan for about 10 months of investing and that sort of thing. Budget for it, because you'll get an outsized return, historically speaking, if everything goes as it has in the past, many times. So that wraps it up for now. I'm not going to do the values on this box. It's, the market's still crazy, and I don't know if I trust any of them. But it looks like a pretty good box. I got a Frostex. Can't complain about that. Cold foil common. I like those. I don't have them yet, so any cold foil I get is a win right now. Very happy about that. Yeah, that's it for this. I hope you guys enjoyed the content. Leave a comment below if you find this useful or you like this kind of stuff, you want me to do more of it. Like I said, this will be a series kind of watching 2.0's release and how it plays out economically speaking over the next 5 or 6 weeks or so. That seems like the reasonable amount of time, and it's also the number of boxes I'm opening. So that's how I plan to do it. But yeah, let me know what you guys think. I really do appreciate the feedback. Really appreciate our patrons for all they do and how they help us out. It's a big deal to us. It really is awesome. So if you like it and you want to support us, go ahead and go to the Patreon. But at the minimum, if you could subscribe, hit like, that sort of stuff, that helps us understand what's good, what's bad, and what's in between. We do look at the data more and more these days as we are getting a larger audience, and we want to grow. We want to get to kind of that larger content creator status, if you will. So hopefully this content is helping us get there. If not, then I will stop doing this content. But I know this one was requested, so I think we'll have at least some popularity for a little bit with this stuff. But yeah, anyways, I hope you guys are out there cracking packs, especially this new Uprising sweetness, having fun playing games. Maybe next week we'll talk a little bit about the meta and how that's impacting the markets, because that's definitely playing into some of the cards that are more valuable, etc. And we get our first data as of we got some today, and we'll get more by next week about what's actually going on and who's winning. So anyways, look for that next time. Look forward to doing it, and I hope you have a good one.